Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the show. My name is Al Gordon, and as always, we're working on your financial freedom. I don't know about you, but I'll tell you what, I had a wonderful, absolutely fantastic Thanksgiving event at my house. We had some close friends over. They brought some of their family members with them. We had about a dozen people sitting around our dining room table, which, by the way, we don't necessarily have capacity for 12, but we made it work. And we had a wonderful, wonderful time. We had a wonderful time giving thanks for all the blessings that have been bestowed upon us as Americans. And one of the things that we did, because, I have a military background, is we set up a special table in recognition of fallen and missing soldiers. And it was the first time that many of my guests had ever experienced something like that. And what it is, it's just a small round table with different things on the table that symbolize the things that fallen soldiers or people that have been held as prisoners of war or just soldiers that have never made it back, what they might be experiencing. And what it did was it allowed me to convey to my guests the importance of freedoms in our country. I'm a little concerned that the freedoms of our country are under attack. And as part of that, I'm a little concerned that maybe, depending on who becomes the president, because as you know, this thing is all not quite sorted out, there is a concern that Joe Biden and Kamala Harris may be the winners of the presidential election. And if they get into office, some things that they are saying they want to do, which may, in my opinion, have a direct impact on the freedoms that we enjoy. And one of the things that we enjoy that's a freedom in this country is the ability to own real estate. Now, I'm going to shock you and I'm going to tell you that the ability to own real estate in other countries isn't necessarily available. There are some countries out there where you can't own any real estate. There are other countries out there where you can own real estate, but there's a lot of terms and conditions placed on it. And if you are a foreign national, forget about it. It's not going to happen for you. But in America, we have the ability to buy residential income producing real estate and other forms of commercial real estate. And there are some legal aspects with regards to tax law regarding the sale of those properties and the ability for us as Americans to buy property, own property, sell property, and then legally defer any tax liability from the sale of a property into another property. In other words, we don't have to pay capital gains tax. We don't have to pay any recapture depreciation. And what that allows us to do is to move that money from the sale of an asset into another asset. And the most important element there is that we don't lose our purchasing power. We're able to migrate all of the proceeds into the follow-on property. But there's a concern. There is a big concern that if Joe Biden and Kamala Harris actually make it to Inauguration Day, they're going to try and change the rules of the game. And if they mess around with the tax laws with regards to the ability to do a 1031 exchange, it's going to have a negative effect not only on people that own real estate, but it's going to have a negative effect on the overall economy of the United States. This is not a good thing. And let me just start off by telling you that Joe Biden in 2019 had an adjusted gross income on his taxes of $4.5 million. His effective tax rate was 33%. Kamala Harris, her adjusted gross income was $1.9 million with an effective tax rate of 37%. See, these are people that clearly, based on their effective tax rate, are not investing in the things that you and I are investing in, and they're not taking advantage of the benefits that are legally provided to us as owners and operators of income-producing real estate. And you know what? They are in the process of trying to change laws because, in my opinion, they don't care, because they don't, clearly, based on their effective tax rate, they're not doing the things that the true wealthy in this country are doing. And they're going to block those of us that are trying to get out of the rat race and get to a place of financial freedom from achieving the destiny that we're trying to achieve before we even get started. Now, I've gone on quite a long time. I have a very special guest on today's show. Her name is Luann Blau, and she is with a firm that is very, very important, not only to me because I've done business with them, but to the entire Lifestyles Unlimited community, because one of the services that they provide is they help us affect a 1031 exchange. And that allows us to move money from one asset to another asset and get a lot of great benefits, which, by the way, trickle down not just from us, but to the people associated with the transactions that we do. By moving money from asset to asset, we are creating jobs. We are creating great places for people to live. We are doing a lot of things which on the surface you can't see. But I will tell you, these things are in effect. When we come back from the break, I'm going to bring Luann on, and we're going to get into what a 1031 exchange is, and more importantly, the dangers that might be out there. You don't want to miss this.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show, and a happy day after Thanksgiving to all of you out there. Now, before I bring my guest Luann on, what I want to do is give you an opportunity to attend a very special educational event that Lifestyles Unlimited is hosting in conjunction with Exchange Resource Group. They are one of our vendors in the Lifestyles Unlimited community. And what they have done is they have put together a very detailed analysis of what a Biden tax plan would look like. And more importantly, what they've done is they've dialed right into what it looks like for you as an investor. And I'll be honest with you, I don't care if you're a real estate investor. I don't care if you're invested in stocks or anything like that. The things that the Biden-Harris ticket are promoting will have a negative effect on your investing if it goes through. Now, there's a lot of things out there that could, get in the way of that, but my crystal ball doesn't work. So I think it's very important for you to understand what is looming out there so that when you are educated and you understand the situation, you are better able to react to it. And if you would like to attend this event, I don't care if you're a member of Lifestyles Unlimited or not. We have opened this thing up to everybody because we think it is so important for you to understand the potential to impact your life. So if you want to attend this thing, it's going to be Wednesday night. I'm not quite sure of the time, but don't sweat that. Send me an email at askal@luinc.com. That's askal@luinc.com. And what I'll do is I'll just shoot you back the link so that you can register for the event. Again, it doesn't matter if you're a member of Lifestyles Unlimited or not. We think this is so important. Everybody should attend. So I'm going to stop talking a little bit, and I'm going to bring my guest Luann on, because really, when it comes to what 1031 exchanges are, this is somebody that's on the front lines of executing 1031 exchanges on behalf of our members. And in full disclosure, They are in the process of doing 2 1031 exchanges for me right now. As a matter of fact, I signed some final documents today and made the whole process super easy peasy for me. So that's a good thing. But Luann, tell us what a 1031 exchange is and why is it such a powerful tool in the investor's tool bag?
Okay, I can do that. So 99 years ago, coming up on the 100th anniversary of the 1031 exchange in 2021, the IRS allowed, it really started with a bunch of farmers and ranchers just sitting around swapping property. Evolved over time, kind of the format we know now started in the 80s, but it's a way for you real estate investors, if you've owned a property longer than a year and a day, so you qualify for long-term capital gains tax, to defer, when you sell that property, to defer that long-term capital gains tax and any depreciation recapture. And instead of paying it to the government, following the guidelines, which we have several, to purchase new real estate. So you're basically using that money to reinvest in real estate. And it was started to stimulate the economy because we all know we're not very wealthy real estate investors. We all know we're not big corporations. So it allows the everyday real estate investor, like you said, to escape the rat race by allowing them to increase the amount of property they can buy.
Is there a limitation on the number of exchanges you can do?
No, there's not. You just need to hold your property that you purchased. A straight exchange starts with a sale and ends with a buy. And then when you purchase those new properties, you just hold them for another year and a day, and then you go forward until you die, which you want to talk about the stepped-up basis now?
Yeah, let's do that.
Okay, so it's a way you can do a lifelong estate planning with your real estate. When you die, then your heirs inherit the property at the value it is on the date you die, meaning that their new basis is the property is not the old basis that you would have had 20, 30 years ago when you bought the property. But they're only going to be taxed on the difference between the value of the property on the day they inherit it and the value and the gain on the property when they sell it. And that also is a really key part of the potential changes that are coming down the road that we need to do our best to combat. It would affect long-term real estate plan.
So in a nutshell, if I bought, and I'm going to keep these numbers really small because I'm still suffering from, a turkey hangover, even though I didn't drink anything last night. So if I bought a house sometime in my life, and let's say I paid $1,000 for that, and then I wound up selling that property for $2,000 somewhere down the road, I would have a potential capital gains burden between that original basis of $1,000 and the gain that I made at that $2,000 sales point, which would be a capital gains potential of $1,000 plus any depreciation that I took against that property, it could be recaptured. So my tax liability, depending on how long I owned that property, could be fairly...
depending on where you live.
Oh, yeah, that's true. It could be potentially significant, but because of the 1031 exchange, I'm able to defer that, and I can keep doing that time and time and time again. And then let's say I get to the point where all of a sudden I've bought a property that's now worth, now let's go big, let's say $1 million, and I've deferred all of those taxes. I pass away. My kids take over that property at $1 million, and if they sell it for $1 million and $1, technically their tax liability is only on that extra dollar?
Correct. Yep. And no depreciation recapture. That all goes away.
It all goes away.
Dan McCabe, my boss and longtime exchange accommodator, will say you defer, and then you die.
And that's a good recipe for building wealth and the ability to create the wealth and then transfer that wealth to your heirs so that your heirs can take full advantage of the hard work that you put in during your lifetime. And all of that is potentially at risk. When we come back from the break, we're going to get into what is going on in the state of Georgia, and we're going to talk about the threat to the 1031 exchange.
We're back with the Lifestyles Unlimited Real Estate Investor Radio Show. We're here to answer your questions and help you become financially free.
Welcome back to the show. If you're just joining us, I have a special guest on today. Her name is Luann Blau. She is with Exchange Resource Group. They are a 1031 exchange accommodator, and they're a very important component of what you need to have available to you if you choose to do a 1031 exchange. Now, 1031 exchange is designed to allow you to defer any tax liability from the sale of real estate that is owned for investment purposes into another like-kind type of asset. So what I've asked Luann to do is kind of give us a quick breakdown of what the rules of exchanges are, and to maybe talk about the different types of assets that you can actually exchange into or out of.
So, 1031 exchange involves the sale of anything defined as real estate and the purchase of anything defined as real estate that's held for investment purposes. If we have any people who flip properties on here, you should not do a 1031 exchange. They differentiate between held for investment and held for the purpose of resale. Like kind is often misunderstood. It doesn't have to be single family to single family. It could be commercial to bare land. In Texas and other states, oil and gas mineral rights are defined as real estate. We're based in Colorado, and Colorado water rights are defined as real estate. So it kind of varies state to state, but you can buy anywhere in the U.S., Guam, and the U.S. Virgin Islands. Funny story on the U.S. Virgin Islands, there's a senator named Charlie Rangel who was in New York, and he owned a lot of property in the U.S. Virgin Islands. So now, in the 70s, he got that changed, so you can buy in the U.S. Virgin Islands.
Shocker.
Shocker, exactly. So 7 rules. Well, 6 rules, but we've kind of added one just because it's very difficult when somebody calls us after they've already closed on their property and wants to do an exchange. 1031 exchange has to be set up before closing on the sale. Right, Al?
Yes, ma'am.
Clients?
Yes, ma'am.
Okay, so that is the most important part, getting going. We'll talk about the 6 rules. So the first one is it has to be a property that has been held for business, trade, or investment, and the generally accepted time frame is a year and a day. Then from the date of closing on the sale, we go by the settlement statement date. You have 45 business days to identify a list of replacement properties. Right, Al? In the middle of an exchange.
Yes, ma'am. And I've done everything as you've directed me to do it, and that has kept me on track.
There is no exception to that 45-day rule unless we did have one this year because of COVID. When the government extended the tax deadline till July 15th, people in the middle of exchanges were also awarded that extra time. Or there was a hurricane in Houston a couple of years ago, and we did get an extension on that. But normally you have to have nailed down what you want to buy by calendar day 45, and we'll send you a form. Then you have also 180 days from the date you close on the sale to complete the exchange. You have to use a qualified intermediary. That is what we do, and we value our lifestyles relationship greatly on a number of levels. But what we do, instead of you getting the money from the sale at closing, your money's going to transfer to your exchange account, which we will set up with the bank that we use in Denver. Segregated account, no commingling of accounts. There was some fraud back in 2007, 2008 that caused a lot of people trouble. So your money is held FDIC insured in a segregated account, and then when you get ready to buy, we do the same thing on the other end, and you have to sign off on the wire forms, as Al did this morning, because he has 2 purchases on Monday from another Lifestyles member who is using these 2 properties and selling them, and then he will start the 1031 exchange process. Other 2 requirements are title. The taxpayer ID that sells has to be the same taxpayer ID on the purchase. And then the other rule is when you buy your replacement property, you have to purchase property that is equal or greater in value than your sales price. Off your sales price, you get to deduct some customary seller expenses, but not the amount of the note payoff. So you have to buy property equal or greater. If you don't quite make it to your reinvestment goal, that doesn't blow up the whole exchange. It just means you're going to pay tax on what is left over, which we call boot. So that is about an hour's worth of class in how many minutes, Al?
That was actually pretty good. I mean, I was sitting here going, man, I actually learned something here. This is the question that always pops into my goofy brain. Why do they call boot?
Because you're booting it out of the exchange and you're booting a percent of it to the government.
Really?
That's my definition.
Oh, that's your definition.
My definition. I have no idea.
All right, yeah.
In the IRS, I have no idea.
I mean, I was thinking, where did that term come from? I mean, I've got a couple of business degrees, so I've heard things called different things, and I've had to adapt to that. But I was like, boot. Why is it boot? Hey, let me ask you a question that some people may have on their minds with regards to business property. At one time, wasn't it permissible to use a 1031 exchange to transfer business property?
Oh, yeah. Up until 2018, we got to do a bunch of fun ones. You could, if you wanted to sell your yacht, Al, and buy a newer, fancier one, you could do that. Airplanes, ranchers that held cattle, and there was a fun kind of rule on that in that if you owned cows, you had to 1031 exchange in the cows. You couldn't 1031 exchange in the bulls. If you
really?
owned bulls, you had to. Yeah.
Oh my!
Music, isn't that fun?
That's
musical
sexist.
Instruments. It was very specific because it was personal property. So, like, you couldn't go from a 2-seater puddle jumper up to a huge Learjet. There were limits on how high you could go. We even looked at doing a cello for one of your new people down in San Antonio because he is a member of the San Antonio Symphony, and he had a very valuable cello. We didn't quite get it done, but, yeah, that was a compromise that Trump made with the Democrats in 2018.
So the erosion of our benefits has actually started to occur, and it may get worse if, by chance, Biden and Harris get into the White House and maybe the Senate doesn't maintain a Republican Senate seat. Well, what do they call that? That's the majority. The majority. Yeah, and I think that points to Georgia and the importance of this Georgia runoff election. Yeah, I'll tell you what. We're going to go to break, Luann, and when we come back, we're kind of focus on that because I think that's very important. That is actually a pivotal event in our current environment, which could have a negative effect on our future. Send me that email at askal@luinc.com, and I will get you registered for the event.
Here's Lifestyles Unlimited founder and CEO, self-made multimillionaire, and national radio host, Del Walmsley, on getting the information you need to get through this.
So you ask yourself, isn't this the wrong time to get out of the stock market? Very well could be. But maybe it might go down. And then you ask yourself, man, if I would have had some of that money, I could have used it. People are going to be afraid. And the people who are in real estate that are losing money are going to be afraid. And they're going to want to get out. And when they do, we're going to be able to go in and buy at very advantageous prices. that are going to change our family's future, quite honestly. So you need information on how to do that. You need the knowledge of how to get through this. You need to get into Lifestyles right now.
Lifestyles Unlimited has been helping people succeed since 1990. Join us for our free online real estate workshop and learn the 7 principles we teach to run our businesses and provide for our families. Register at lifestylesunlimitedworkshop.com.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. On today's show, I have Luann Blau with ERG. When you take ERG and you expand it out, it stands for Exchange Resource Group. And what they are is an accommodator that provides all the services that you need in order to effectively perform a 1031 exchange. And what Luann is doing for us today is she's giving us some information on what a 1031 exchange is. And trust me, we don't have enough time on the radio show to go into the rules, but when you're ready to do a 1031 exchange, ERG is the entity to have on your team because they have made my 1031 exchanges pretty much seamless. It's nice to have a teammate that takes care of all the important things and checks all the boxes that needs to be checked so that I'm not stressing out about it. But along those lines, one of the things that ERG is doing with Lifestyles Unlimited is they are partnering with us Wednesday night to give you a very in-depth class on Joe Biden's proposed tax plan as it relates to real estate. And there's a lot of things in the Biden tax plan that, if put into motion, could have some negative effects on us as real estate investors. It could have
devastating effects.
Devastating. There you go. Yeah, there's Luann. So what I want to do, Luann, is, first of all, let me just remind the audience that if they would like to be a part of that class, it's going to be available to everybody. We don't care if you're a member of Lifestyles Unlimited or not. Send me an email at askal@luinc.com, and I will get you the link to where you can register for the event. It's going to be held December 2nd at 6:30 p.m. Central Time. So for you folks on the East Coast, that's going to be 7:30 p.m. Yeah, and we're specifically wanting to reach people in Georgia because, well, what's going on in Georgia? Why are we so concerned, Luann?
We are concerned because there are 2 Senate runoff elections in Georgia. And if the Republicans can win one or preferably both of them, it will keep the Senate in the majority, which means a lot of the extreme measures that are being put forth on this Biden tax plan will have a much more difficult time getting through. I'm sure some of them will, but the important thing for real estate investors, they've got to get it through the House and Senate to get anything changed. So that's why we are pushing to educate people in Georgia to help them. And you don't have to be Republican to vote red, if you will, in the Georgia election. But as a real estate investor or investor of any kind, it's very, very important that you vote. If you didn't vote in the presidential election, registration for the runoff in Georgia is December 7th. Dan McCabe's going to go in on Wednesday night. He's our owner of our company on all the nitty-gritty of the numbers of what it could look like if the Democrats sweep the House, the Senate, and the president.
Now, there are 4 things that you guys are absolutely concerned about because you've done the deep dive. I mean, I've talked to Dan, and he's one of those guys that can actually read the ad nauseum pages of a tax plan. And I think those 4 things that you guys are going to highlight on Wednesday night are very important. You know, one of them is the increase in income tax rates across the board. Another one is to eliminate or completely restrict 1031 exchanges, which, you know, is not going to help anybody grow wealth. Another one is to eliminate the capital gains treatment. And the last thing they want to do is eliminate the stepped up basis. So, I mean, these are all areas that we kind of talked about a little bit, but you're going to get into the nitty gritty on the class, are you not?
Oh, we are. And it's not only that it's going to eliminate wealth, but it's going to affect, your rental market, the ability for people to rent affordable housing if we get constricted to the amount that they're talking about. But yeah, Dan's going to go deep with as much time as we have with what will happen to federal gains tax, what will happen if there's no 1031 exchange, what would happen to your heirs if there's no stepped-up basis. So, yeah, I would love for you to join us on Wednesday. 400,000 adjusted gross income seems to be the magic number as far as what they're targeting to start increasing tax rate, which seems like a lot, but it's really not when you consider all your assets.
Yeah, I think that, there are people out there that just kind of go through life minding their day-to-day business, and they don't understand that these things are in the works and that these things can have a dramatic impact on what they're trying to accomplish in their own personal lives. And unfortunately, they find out about these things after the fact.
That's true. And any listeners in Georgia, you have a chance to help make a major impact. And anybody listening, start now to write your senator and your congressman. The one thing that I've heard people say is, oh, there's so many people in Washington who own real estate, who've made their money in real estate. They're never going to do away with the 1031 exchange. We went through that 4 years ago. We went through that 8 years ago. And that is true. I'm sure the Bidens and the Harrises somewhere along the line, I don't know that for sure, but have maybe done a 1031 exchange on real estate. But we're just a little bit more on guard this time and wanting to make sure that we have a checks and balances between the House, the Senate, and the President.
Yeah, I think you're spot on. I was looking at some of the notes that Dan sent over, and what he's doing is he's citing a organization called the Tax Foundation General Equilibrium Model that was designed back.
It's a pretty neutral company. Yeah.
And, wow, they're saying GDP during a Biden presidency is projected to go down. They're projecting that capital stock will go down. They're projecting that the wage rate, that's the salary that you earn when you go to work, that's going to go down. They're projecting a loss of about at least 500,000 full-time equivalent jobs. These changes in the tax code, which were put together almost 100 years ago with the desire to stimulate the economy, have done that year after year after year. And it has also allowed us as real estate investors to grow our assets, to provide more and more qualified workforce housing, which is well redesigned. I mean, we go in and we buy distressed assets, we fix them up, and we provide workforce housing to people that otherwise would be dealing with stuff that isn't nice. And I'll tell you what, our stuff is nice. But if you limit our ability to transfer from asset to asset to keep doing that, you're going to have a negative effect on,
so many areas.
Absolutely. So, Luann, I've got about a minute and a half left. What I'd like to do is give you that opportunity to tell people how to get a hold of you in case they want to ask questions about 1031 exchanges, or maybe they just want to get one done. How do they reach you?
I am working out of Dallas. The company's in Denver, but my direct number here in Carrollton, Texas is 972-863-1031, funny enough. So 972-863-1031. My email is luann@erg1031.com. We have a Facebook page called Exchange Resource Group, and I have a fun education Facebook page too for any investors that want to join. It's called 1031 Exchange Assistance. So just send me a request for that and answer the couple questions, and I will add you on there.
Awesome. And of course, we can find you on the web at ERG 1031, or just do a Google search for Exchange Resource Group, correct? Okay.
Yeah, and if your Lifestyles members listening, we're in the vendor portal. We work with a lot of different real estate organizations, Lifestyles being primary, and we value that relationship and how they can assist you in learning and growing your investment.
Well, Luann, I want to thank you for your time today on today's show. And for those of you wanting to get into that class on Wednesday, send me that email at askal@luinc.com. And remember, it's not the money, it's the lifestyle.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.